I found it interesting that a friend of mine was on CNBC and he was actually in a panel discussion, a couple of different people that worked for CNBC, and then there was one guy that was up against him. You know, and they were talking about investing, and one of the guys was talking about investing investing in gold versus investing in the stock market. And he was saying that, you know, forget it, you could just shred this stuff up. He was talking about paper, and he was talking about paper money. You could just shred this stuff up. It's worthless. It's not worth investing in, so on and so forth. And then he was talking about investing in his Krugerrand. And, you know, one of the commentators talked about how much extra money you have to pay to buy an ounce of gold in that particular form versus what it would actually sell for. So number one, you've got this hurdle that you've got to get over, which is the cost of investing in the gold in the first place. But, you know, the point about gold investing and looking at that versus the stock market historically, why do I always talk about gold? Well, you probably know if you've listened to the show or you listen to me talk about this much, that gold and commodities in general are not really investments because they don't have a cost of capital. There's nobody using your money and paying you to use it. But another thought struck me as I was listening to them. If you think about it, if he's right and these currencies actually go away and they become totally worthless, what will happen is companies, of course, will still charge for their services, won't they? They're going to have to get paid for their services. Whether it's the devaluation of the currency and they just have to charge more for the services, that may be one way, but what if gold became the currency of choice? Now, it's totally impractical. That's why it was abandoned as a currency. But if you think about it, that's a good argument as far as why it is that we won't go that direction, why it is that stocks are still good, because if we start charging in gold, then great, you know what? We'll own gold through the process of owning our stocks because that will be our earnings, so to speak. And that is what you own when you own stocks. You own the earnings of the company, number one. Number two, this argument about devaluation, all the terrible things that were going to happen, was the same argument that we heard in the late 1970s, early 1980s. Now, of course, there was Business Week article that I talk about quite frequently when I'm teaching my initial workshops, which is called The Death of Equities, how equities were dying and all these other investments were going to take their place. Well, what ended up happening during the decade of 80s? Well, literally, gold ended up dropping about 25%, but large U.S. stocks went up about 500%, and then you had emerging market stocks up almost 800% during that period of time. So don't get too flustered when you hear this talk about gold and everything's going to fall apart and that currency is going to go away and stocks are just a terrible place to be. Stocks have always been a very good hedge against inflation and the devaluation of currency for all the reasons I always talk about. We'll catch you next time.